Okay, peace and blessings, everybody. Welcome to the technical analysis class. All right, better known as the Sauce Factory Wednesdays. I need to start saying the Chronicles of the Sauce, but yeah, I'll probably retitle that Chronicles of the Sauce. All right, so we're here today. We're gathered to talk about entries, talk about these candlesticks. I know a lot of times the make or break for a trade is the entry. It's not necessary the setup, it's the entry is key, right? Because you can have a great trade, but what ruins it every single time is the entry. Because you get that bad entry, you can turn a winner into a loser real quick for no reason. So we're gonna go over a couple of different candlesticks I like to look out for that I prefer to enter the market on, or I pay attention to say, hey, it's about to be a shift or a change of direction inside the market. I like to keep my eye on. These candlestick patterns show up on all time frames, all charts. Once again, all time frames, all charts. It will be different variations of the candlestick patterns, but in general, you just try to keep track of the candlesticks as they show, right? And from there, that would allow you to kind of like understand what's about to happen in the market, and it will not surprise you because a lot of times when you're in these trades and you get a shift in the market and you're really not understanding that, hey, I'm at a premium location here and the market is about to change up and shift on. But by recognizing these things, you will be able to take advantage of the market, and you also be able to capitalize on some nice trades. So off that, we're gonna go with one of the patterns good sister Shantae was talking about is the parent orders, right? Or two candlestick rejection block. Oh, that. So right here with the top of an uptrend, this one a little more aggressive, right? Right here. You had the boosty candle to set it out. That's the caution candle indicator. Boom. When that took this candle out, right? It took it out with force at a high. That should not happen, right? That should not have happened if it was going to continue on the uptrend. Now, the common mistake, what happened with most traders, they'll be in this uptrend. You'll probably get in somewhere over here. Let's say you catch that breakout right there. Boom. You're here on the breakout. You're enjoying yourself. You're having a good old time. You're not paying attention to the trade. It hit resistance, right? Boom. Now you have resistance. Let's go ahead and make clean because I have templates. What typically happens, you have the strong candle come through, but it's no follow through. It gets completely wiped out. Now, right here inside this candle, we have another candlestick pattern for a typical continuation. Blow it up and then zoom in. See right here, you have a 3 candlestick order block continuation, right? So you have one engulfing candle, an indecisive candle followed by another engulfing candle. Pattern also happens here. But the difference is it got completely wiped out. In most cases, it should have went up. It then came back down, retest the zone to verify the order block, and then go off. But it did not. Why? Well, the sellers took over. You was at a high. It probably reached where it needed to go. We look to the left. I'm sure it's something there. And we'll see what it actually keyed off of to say, hey, we done here. But we'll have to go to a higher time frame for that. For the current moment, we're going to focus right here and see how we could have prevented this or how we could have took advantage of the next opportunity. Now, where did it trade and stop at, right? So by looking at the previous candles, this engulfing candle is key. Anytime you get an engulfing candle in an uptrend, that's going to leave you an opening, right? So if you did not catch this, it's typically going to leave you another opening to take advantage of a second chance opportunity, but you have to be patient for these. With this said spread here, it left you with a nice fair value gap, right? Back testing, boom, this is your gap right here. So the imbalance of price, it left you a nice little opening for price to return. Now look at where price keyed off of. Boom, right into the gap, price went off, retracing back to the highs. But with this disrespectful candle, they completely took out this other candle here. I know for sure it's gonna reject. If not, if we do not make new highs, this pattern is over. This is toast. So anytime I see a pattern like this, I would like to enter somewhere inside of this candle. I'll let it do what it want to do. Then once it starts showing weakness on the very next candle and it fails to make a new top, we taking them out. Now you'll say, well, how we know, right? Pay attention to your wicks, right? When you see the new candles opening up and you see they start to slope like that, that's letting you know progress is no longer being made. We return back to what? Resistance. If price got rejected here, 1, 2, it's the third time. This is resistance. Okay, we can tighten this up and it'll show you that's resistance. Price do not like here. They don't got what it takes to go past this number, right? So when that very next candle open up, the candle open here, it's slightly wicked up. It says we don't got no more, Captain. Boom, 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 right? So you'll say, well, how can I enter that trade? How can I trade this trade? You can wait for price to either open up on this said candle, see if it's not going to make progress, if it's going to turn around, or you can take the entry of the rejection. Because we know what's going on. Stop loss to the previous high. This market structure. This is your last high. If it takes this high, it may continue, so you don't want to mess around and find out. There's no need to, right? We have a clear-cut picture of what happened. This is the high. If it take it, going to keep going, so why mess around and find out? Now, what you want to target is your last swing low, which is here. The cheat code going to give you the change of character when it breaks it, right? But you always want to target the last swing low because the price been there once, it can go there again. That is a very safe trade. So looking at this setup, you would have risked $6.50 to make $31.75. But this is the futures market, so we're going off of ticks. So you're risking 26 ticks to make 127. Easy, right? That's how that goes. I trading those said patterns. Boom, boom, boom. Now, if you want to know where price can possibly go, you can target your last swing low. It's a high probability price can bounce here because you look what happened. You had another fair value gap back over here. The price keyed off of one time before. Now, it was nothing for price to react again because that's exactly what it did, closed up, but it was already at a high and the sellers took over the market and they decided to dump it. Okay, that's what happened now. So these are things you want to pay attention to. That's why I say we don't get greedy. We want the guarantee because last thing you want to do is be in here. It comes way back up here. This is a 2-minute chart, FYI, right? So that'll let you know how severe that pullback was. But in general, if you took this trade, it was out by here, you could have been 10 minutes. Technically, you could have been done in 4 minutes. Depends on when you got in. 2-minute, 4-minute trade. Real quick and simple just by recognizing. The trend is over. The fair value gap didn't have enough bounce in it because if it bounced out the fair value gap and it did not break the high, well, guess what? That's resistance again. You can take it down. Safe to say, they are not going to do what they say they're going to do. Anytime you get an engulfing candle with this much force, taking out a previous high or a previous high candle, right, is letting you know the trend is possibly over. Do not F around and find out and get greedy. If they decide to come back up and it still can't take the high out, guess what? You sell it. You right at resistance. Where your stop loss go? At resistance. You don't have to risk that much. You can literally put your stop loss right there. Boom. I'm good. It's sweet, right? That is how you want to trade. That's how you want to enter the market. So let me make this a little more clear just in case people cannot see those things later on. So right here, boom, this is the high. If the market decided to go up, let's say we was wrong, right? Boom, we go, it takes the stop. Okay, I'm right here at the highest point. So the higher I enter up, they say, man, listen, the moment that thing goes bearish, it flipped that candle, you couldn't enter it right there. Now my risk going down. The higher I end up close to the top, my risk going down. If I would have set a limit order right here, boom, what's my risk? If I would have said, man, the bottom of this candle, I'm going to set my limit order, stop loss up there. I see a little bit of red. Then after that, I'm cleaning house. your risk is lower by entering at resistance to sell. You do not want to sell at support like most people see a trade way down here and take the sell. No, that is not what you want to do. You don't want to sell at support. You want to buy at support, sell at resistance. No matter which fancy term, no matter which fancy technique I show you, it's still the same old, same old. Support and resistance. You sell at resistance, you buy at support. Point blank, period. All right, let's flip this on top of his head, right? This became order block now, right? So let's look at from this bounce and say you would have had your order waiting right there. Play it back up. That's 52 ticks back up, 13 points. Back up before it dropped. That's a great trade for some people. Some, you know, one of the, I know Coach Roach like his 10 points. You've been out the way.
Listen, bro, 10, 20 points, I'm good.
Come on now. You out the way smooth right there. That's your trade. Get you to set a link order right here.
Sleep.
Exactly. And how they'll look with proper risk management, because you don't have to be loose with your risk management. It's very simple. If they stopped here last time, you stop loss outside the zone. You're going to risk 34 ticks. Boom. You trade it up. They say, well, I want to trade it back up to this last swing low here, right? So I trade it back up there. If it goes, great. Which technically you kind of got, you say you dodged the bullet right here because you follow Coach Amy and anybody else, you understand price got to retrace back into the previous candle by 50%. Boom, you already know they're going to go back up, but you don't take risks like that. But if you happen to did, you had plenty of room to get out. Okay. But you see setups like this, you have your entry sitting right here, stop loss right there. If they go past it, you wrong. Okay, you live to fight another day. But the whole thing about it is risk management. Risk management. You don't want to F around and find out. You want to say, hey, you get there, hit, boom, take me, great. In the story. Okay. Let's keep scrolling down the market, see what else we got here. Now watch this. You got a pin bar, right? Let's look to the left. What did the pin bar key off of? All this nice consolidation you got here. Anytime you have consolidation, prices run to that like a magnet. You see it's breaking down, breaking down, breaking down. Boom. Price want to come back to these consolidating points because that's market liquidity. So you want to pay attention to those, right? So the moment you see price coming down, let's say you missed this trade. Fine. Or let's say you're a breakout trader, right? Breaker structure. That's made, technically, it's programmed in the algo just for breakout traders. You get a breaker structure. Say, man, that's my last swing low. You know, price break down, I'm going to take it. Now, let's say you're kind of not so clean with your entries and you want that little golden goose. You'll say, man, I'm going to take it, stop loss up here. Or I would say, well, the previous counter that broke structure, stop loss right there, right? That's a little bit outside of my risk reward, but I don't like it. So we'll target the lows back over here. Just over here. Always try to see if you can get to the lows because you never know. Price like to run the lows. If they can get down there, great. If not, it is what it is. That's why you trail your profits. So we'll say, oh, 140 some ticks. Break out, I risk 76. Okay, cool, let's go for it. Right? Price got down, no cigar. You would have entered, you would have got 123 ticks, still a great trade. With proper risk management. They say you had your stop loss here. When you trailing, right? I'm not keep it's multiple ways you can do it. You can go candle tops, right? You go mid of the candle. You actually get stopped out. Candlesticks got to be properly filled. They got to be properly balanced. There's an imbalance here. When they left this imbalance and they went on about their business, that's an easy reversal. So you never get comfortable in these trades because they will want to come back to these areas and rebalance price. Okay, same thing here. See, that is not proper candlestick placement. Same thing here, not proper candlestick placement, right? Before we go anywhere else, I'll show you. They needed a body close. Even the bodies matter. So you want to, these are details you need to start processing in your head fast as possible and start paying attention to those said details because they get real. Now you see how they originally keyed off of that right here. They got a counter close. Boom. Volume imbalance is taken care of. That's why they bounced, came back for this key area. Rebalanced price properly. Needed a counter close. It's called a volume imbalance. Okay. A volume imbalance is from here to here. You see how they got wicks, but no body. They need a body close inside of this area. The wicks pretty much line up. That's how they overlap. Same thing, you had a wick, it's a wick overlapping here, you smooth, right? But you had no wick to wick here. So it's a priority system. This was the first major volume imbalance. That's why they came back, stayed around until they got a counter close, and then they went on about their business. But remember, you still had this bad boy sitting here in the wind. So they got to grab some money. That's why they drop price down low. They drop price down low to trick people into going short. Then once you get comfortable, you fall asleep at the wheel. That's why I tell you, don't fall asleep at the wheel. They flip the market and go in the opposite direction. That's what this pin bar is. They had their order sitting right at this level, ready to pounce on anybody who was still in their shorts. They was ready for you. Great thing about pin bars, it's another one of those reversal trades. You're at the bottom of a trend, right? Boom, your entry is the top of that candle. Stop loss, the bottom of the candle. It's 84 ticks, target your highs. Where your last swing high at? Right here. It's your last swing high. So let's get rid of this block because we already know they traded into that, they smooth, they got it out the way. But we want to go for the last swing high. Boom, they got there. 143 ticks. If you see price going back up, target the last swing high, get out of Dodge. You ain't trying to hold to the moon, but you can take advantage of that. So you would have got the 120 down, 143 up. What we looking like? 165, 167, right? Give or take. Actually, I've been 267, 267 ticks. That's a very great day from some traders. But that's by simply understanding the candlestick patterns, playing them at the right part of the trend. You want breakouts. You want reversals. You want them at highs. You want them at lows. The best part of this trend was, so I say, is not a lot of trades in the market. You cannot trade all day because not a lot of great opportunities. Okay. Let's label this 1. It's 1. This was number 2, right? Those are 2 clean points because you know you got a lot on the table. This is a possible 3. I don't really like breakout trades this down to support. Why? Because at any moment it can flip like it did. Could you make some money off of it? Yes. But is the risk worth the reward? That's the question you got to ask yourself. How much you got to risk for this trade? How much I'm going to get back in return? If I got to risk 50 plus ticks just to get 100 ticks, or if I'm getting stopped out 2 times, well, guess what? The trade no longer worth it because if I risk 50 tick a pop. At that rate, now I'm at a break even. I'm trading for free because you still got to take in the broker fees. Once again, that's in all markets. So no matter how much you risk on the trade, if you get stopped out twice, including fees, you down. So now that trade got to double for you to get back to a good point. But then that messes your trading psychology. When you playing from the backfield or trying to make it back, you're trading from a place of lack, and that makes you take unnecessary shots, which are not great opportunities, and lead to a loss of trades. The whipsaw effect, where you're going from one side to the other side, you getting toe off the bone, and all you're doing is racking up the losses. And that don't help nobody, and I mean nobody. Okay, so you try to play it from one on the screen to the next screen. That's the best thing to do in the market. In the market, look for the extreme points. You don't want to be in the middle. Let price get to exactly where it want to go. You want to play the external market, not the internal. External is where it's at. The internal get your toe off the bone. So can I get it? Don't do it. But I always trade towards liquidity. Okay. So eventually price return back to the volume imbalance as we see over here. And now it's hovering around because the Asian market is open and prices are on the flow out because there's more volatility. But you see, it returned back to the imbalance of price. That is key. Price will return. It's got to know when and where. But for a great little scalp, that was a great trade from point A to point B. It's guaranteed to take a high. It's guaranteed to take a low, or at least get close enough where you can exit with decent profits. That is the major key. Okay. So it was another trade I was looking at. AMD. We'll go over there. Boom. All right. Now we're gonna go to the daily chart. We're gonna get out these little scalping time frames. Oh, did anybody have any questions about that last chart I just got off of?
I have one. You may have covered it, but if you can go back to that area where that the internal market was.
Yes.
My second trade was in, it wasn't where the pin bar was. That was my third trade. The second trade was where that break of, where the yellow dotted line is.
Mm-hmm.
I'll go over to the left. So there I had like a double top. That third candle down is where I entered, thinking because price didn't come up high enough to those highs, it was continuing down. It wasn't that much wick on that doji candle, so I thought it was going to make a 3 candlestick continuation to the downside, but you see how it wicked up. The only thing that saved me was I had my stop loss at the high. That's the only reason I didn't lose the trade. But that was yeah.
All right, because here's the whole kit and caboodle here.
Mm-hmm.
Right. This is your trouble.
Mm-hmm.
Okay, so let's zoom in. I'll show you. See, price wasn't properly balanced.
Right. So I also saw that volume imbalance, which also made me feel like, oh, it's going down. It's going to continue down because it's going to fill those wicks to fill those volume imbalances as well. So when I thought that doji candle was making a smaller doji continuing down, I thought all that was in my favor, and price was not creating new highs until that wick came up.
Yeah,
So yeah, I just didn't see that coming. Mm-hmm.
now that typical happens, right? So in general, that's why it's very important to have a good stop loss, right? Most
Mm-hmm.
cases, people find a stop losses like right here in the middle of price.
Mm-hmm.
Some people can have a stop loss right here. By the grace of goodness, it didn't get hit, or at close, it didn't get hit by grace of goodness, right? And
Right.
you'll probably there didn't get hit. Now, sometimes you got people who fall asleep at the trades and they put their stop loss here, and these are people getting smoked out when they reverse price because they'll stay here all day long and
Mm-hmm.
they come back, they know your stop loss still there. And they
Right.
also know some people stop loss is still down here because of this uptrend, right?
Mm-hmm.
So in some cases, yes, you will see drawdown. No trade is perfect. And if you're sticking with your overall trend, you should be well. Now, if it happens, don't move the stop loss, take the L and get out the way because once again, this is a prime example of what could happen. It could have flipped right here and ran those highs any moment. So we never know for 100%. We just know like, hey, I have a system. I see this often. And if it shows up, I know XYZ.
Okay.
Don't work. Well, my stop loss right here. I have a risk management. I know what I'm risking here. Let it go. We don't negotiate with the stops. If you have issue with saying, hey, I'm going to leave my stop loss or I don't know where to put my stop loss, don't enter the trade. Everything must be defined before you click that button for submit. Before you get yourself in any trouble, all risks need to be defined and you need to be settled with that said risk and say, hey, I'm good with this. This is good. I want to lose this. I don't want no more, no less. This is what I'm signing up for, right? Now,
Mm-hmm.
come down to profits. if you see something else going on in the market, you see like, it's actually a little bit stronger than that. You can probably say, oh yeah, let me slide the stop, take profit up. But that turns into one of those maybe yes, maybe no's, right? That's why I like to set a wide take profit target. And then from there, I just trail it with the stop loss and let the stop. I prefer to let the stop take me out. But if I see it getting up to that take profit, I learned moving that and price make a nice little pull back, hit the stop loss, and I get a break even when it was already at my take profit, what I originally set out. That's to make
Yeah.
you look. So, it is what it is. But yeah, that's all they did. They came back, wicked back into this candle real fast, and then they went on about their business. So you just gotta stay frosty. That's one of those situations you set a timer and say, hey, I'll move my stop loss after this time here, but I'm gonna let it sit. I need price to get X amount of ticks away. You can do points, ticks, whatever way you want to go about it. But you say, hey, I got a minimum amount of ticks I must see before I move the stop loss. I got a minimum amount of points before I move the stop loss. I need a minimum amount of minutes before I move my stop loss.
Okay.
Yeah. But yeah, there you go. But if you see
Okay.
if you see price run real fast, and you got a whole bunch of money on the table, like here, if you put an enter at this break of candle here, and you see price run down like this, it's best go on and move your stop loss and profit because they can easily bounce and run up. So when you see price making a screen move like that, sometimes price come back very aggressively. So it's best to lock in a decent amount of ticks because if it comes back too aggressively, stop you out, you're gonna be crying in the car wishing you had more because it was there.
Okay.
Hey, I got a question.
Yes, sir.
I don't see any indicators or buy and sell signals. I don't see anything in all this section that you're talking about. So would that be an unsell? Well, I see it there. Yeah, I see the sell there, and then I see the buy down at
Yeah.
the bottom there, and then the little green indicator. But in the section that the sister was just talking about, I didn't see anything. Now, that may be for some advanced traders, but I don't see anything in there to kind of indicate this may be a good spot or a bad spot.
So think about the buy and sell signals, right? They signify where the trend is shifting and where it's like, hey, it's going into a sell model, right? It's going to be selling down now. I got the sell signal, and as long as everything following those said rules, it's going to sell down. Now, you ain't going to get a sell signal every single spot, right? And you ain't going to get a buy signal every single spot. It's saying, hey, this is on a sell, figure out how to get in. Just because you get a signal don't mean you actually take that signal. You got to let the market give you something to actually enter the market on. So signals and entries are two different things. You feel me?
Yeah. Okay.
So
Just telling you to pay attention.
yes, that's it. It is telling you to pay attention. Remember, indicators are meant to indicate, not dictate. They don't dictate that we get in the trade right here. That is indicate we get in the trade. Because if you look at it, you have a sell signal right here. You would have took a sell, you would have got your wig knocked off.
Right.
Now, understand, it didn't, yes, it sold down because price was drifting down, but that sell signal was signifying that price is coming back to support or to rebalance price.
Mm-hmm.
Once it did that, guess what? The buy signal came back, said, oh, we smooth again, business back to usual, back to business, right? So if you would have took that sell, you out of there. But by reading, this is how you read the algo. The sell signal at the top of an uptrend, pulling back, letting you know it's going to support. Boom, it bounced off support. Guess what? I'm following overall trend, which was bullish, right? Because it putting in good market structure. Boom, boom, boom. This was a signal letting me know price is coming back to support. Great. Remember, like I said at the beginning of the class, you buy at support, you sell at resistance.
Right.
So let's go ahead and get these labels in here. Boom. All right. We're gonna recycle this. I ain't got time for this one. Okay. Load that up. Boom. Boom. This support, this resistance. You buy here, you sell here. You know what I'm saying?
Yep.
Buy here, you sell up here. Why? If prices can't get past this is the highest point price can go. So we want to sell down back to something like this, back to support, which is here. When you start getting it, when you start understanding the complex of order blocks, fair value gaps, and all those other things, I'm talking about these kind of high level concepts, right? But I try to break them down simple as possible so anybody can pick them up and run with it. When you start getting down here, it's still at the end of the day a fancy word for support and resistance. It's just a zone of support and resistance. Okay. It's just a zone. But this indicator tells me like, hey, a sell coming up. This indicator came back over here, says the disruption in trend is slowing down. This caution candle told me, hey, it's slowing down. We about to start dropping or pulling back. This is not a sell. This is nothing but a pullback. That's all it was. A pullback to support. Hint sell signal, right? Boom. Price coming back up. Boom. You can wait. You don't have to get in right there. Boom. Wait a little bit. Wait a little bit. Oh, price kind of getting up. It's not making new lows. Not going to retest the lows. Great. I'm off and running it. Buy signal came in over here. Boom. Okay, cool. If we back out, now let's actually back out to a 1 hour chart and see where the heck price keyed off of, right? Because I guarantee it, there's something. All right, cool. That's where we're currently at. Boom. There we go. 3 candlestick order block. Yay. That's what price wanted. Boom. That quick, right? So going to higher time frames, you do your top-down analysis, you identify this. So you're waiting on these son of a guns when they get here. So now you got a plan. So now we scroll back over here to today and we see price get up there. We say, okay, bet that. Once again, we got another, see this that pairing of orders, right? So they completely took that hour out. Oh, they's coming back. They're pulling back into the zone. So I'm expecting these boys to cheese slide out that cracker real quick when they get up in there. But in theory, I can be wrong. They can continue going up about their business. They probably got other business to handle up at a higher point. Who knows, right? All we can do is run our technicals and wait. Let's go back to the lower time frame because now we know why they stopped there. So if you're charting every single day, you charting your market that you're trading the night before, doing your due diligence the day before, the week before, you have all the stuff ready. Guess what? Let's get this box so we can kind of keep this stuff clean. You already know what's going to happen when they get here. You know, hey, this is a reversal point. I don't need to buy up here. I need to get ready for a short sale. So now, let's get rid of this box here. Get rid of this. Let's clean this chart up. Now, we clearly see what's happening. They got into the zone, a zone of resistance. And what happened? People start selling. People took profits. They picked it back up. Well, because guess what? They don't want you to come with them, KD. They don't want you to shine. They don't want you to have a pool. They don't want you to eat. So they going to make you believe, oh, nah, dog, we was just playing. You going to think they going to do SOS. Same old thing, right? I can't say what I want to say because this is being so they're going to do the SOS on you, right? You thinking, oh, man, it's SOS. They're going to pick that up. They're going to run the highs. Man, I'm going long. Then next thing you know, big dog, we was just joking. Woo! Took all your money.
Fake out.
Yes. It's called inducement. They want you to believe they're going to actually pick this up. That's why they're going to come up so strong. This is a very strong candle, right? Drop it a little bit. Give this that second chance. Oh, man, I missed a trade. Oh, they dropping it. I was going back. Oh, I'm getting that. They gave you 2 green candles. Them boys jump out the way. You holding the bag now.
Now, again, how do you know when this is happening? Is it because of the caution candle? Because I thought the caution candle was telling me that the trend is changing.
Yes, the caution candle and the indicator telling you the trend is changing, right? But here's the
Yeah.
real thing. It's the size of the candles. Where the candles are located, the block that we traded in. This whole order block here. This is the little box, the little red box I just drew.
Yep. Mm-hmm.
All of this is giving me confluence of saying, hey, we should do X, Y, Z. If it quacks like a duck, walks like a duck, maybe a duck, right?
Mm.
So if I see this zone of resistance, because that's what I study this stuff, that's what I use. So I see the zone of resistance coming up. Boom. Price reject, sell signal pop up because I got a caution candle indicator, aka the Boosie candle right here. It popped up. Boom. Price come down. It takes this high. It takes this last high candle, right? It takes that out completely.
Right.
Completely takes it out. Then price drifting back up. Price never escaped this candle. You taper back off again. It's over. Now we can add other indicators or oscillators to show the weakness in the market. Let's do that. I have some available. So we got the MACD, the squeeze, and the swing, right? So let's blow the swing up. When we get there, oh, we got a regular bearish divergence. Let's pop that in quick. I want to collapse this window. So right here, I got a regular bearish divergence. That means, hey, they're going to reverse the trend. It popped up right there. Boom. Okay, great. Selling off. Look at my squeeze. It's tightening up. I got my red indicator. You know what time it is. It's telling me it's going weak, right? Now let's go over to the MACD. Blow that up. We got a crossover. The blue below the orange. The orange is the smoothing. The blue is the fast, right? So as price starting to drift down, bouncing off each other, that's letting me know weakness. Look at the bars. Weakness, low momentum. That's low momentum to the upside. So I don't want to see low momentum going into the upside. Then also, look at the rest of it, right? This was your last swing high right here. Boom. They didn't meet it over here. They didn't meet it over here. Price is drifting. Boom. So that's also telling me, hey, price is going down. See, they've been falling out. The divergence set over here just played out over here.
So you really got to pay attention to the other indicators. That's what I mean by the 4 for 4.
Yes, that's what it is about the 4 for 4. You paying attention to the other indicators.
Yeah.
Attention to where price set. Now everything maps up when you start letting it do what it need to do, right? Once you start seeing the screen points, that's yes. You do not force it. You let it come to you. If you can't see this, you wait. You say, man, that was a crazy reaction. Don't take action. Be patient. Because most traders, they was already sitting here with a limit order right here, stop loss up here. So if you already know this was coming and you're an order block trader, your limit order was right there, stop loss up here. And you're going to say, hey, I'm targeting the low of today. And you'll be like, I'm way down here with it. I don't care. They came from back here. I'm coming way. I'm dead serious. Your order would have been down there just waiting because that's what you're supposed to do. You got a block. You know what happens. They're going to get lobbed off. I'm going to risk this. I'm going to risk 27 points, 26, 27 points, and I'm looking to make 79 points. Patient. People have orders sitting right there that had a risk management. They say, man, I'm willing to take that layoff. I don't know about you. I'm going to sit there and wait. Or you can say, man, I can't risk like that. So I'm going to go ahead and wait and see what happens. See if they get there. And then take advantage. Wait for a reaction. Wait for a setup. This was your break and retest. Broke down. Retest the level of resistance. And then the cheese slid off. That's it. Now, if you get in up here, you just go along for the ride. Wait for them to put another swing high in. You move your stop loss down, right? Keep your stop loss out of danger. That's what you do. But if you get stopped out here, you wait for another pickup. Boom. You see them tapering back off. Keep it simple now. We don't have to get complicated. There's other complicated tools we can use, but we're going to keep this real simple. Follow market structure. Boom. 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 right? Lower low, lower high, lower low,
Mm.
right? But when they flipped it, that lower low is over now. Now they starting a higher high, they starting to cycle all the way back over again. You feel? But as long as they doing that, all math checks out. So you want to take profit here, let the trade pull back because you say I'm gonna take this in 2 parts. I ain't greedy, so I'm gonna take profits the moment it start pulling back. Great, I'm gonna wait for it to put in a lower high because I know it's in a downtrend now. So if this stays as a lower high, I'm gonna get back in and I'm gonna take it back down. That's simple.
Appreciate that, man. Very much so. Got it.
No, my pleasure. All right. Got a cool 10 minutes, Pete. Anywhere got some questions? Nope. Anybody else?
Hey Neo, what's going on, man? How you doing?
Lessons.
I got a question about the algo. I should
Yes, sir.
qualify to get that new version. Is there a class somewhere or somebody I need to reach out to figure out how to download that to get the link?
Oh, hold on. Let me see the link. I'll put it in the chat real quick. Mhm. So, did you? Because it's a whole new separate algo. It's not like the old one. So it's totally new. It's not a upgrade, nothing like that. It's a whole nother algo.
Okay, so it's not an upgrade from the old ones. You still have to purchase it.
Yeah, but it's the same cost though. So
Okay.
you already paying for this one. They made the exact same cost, so you don't have to worry about like, oh man, this cost me. No, they didn't try to upsell it. It's exact same cost. So they straight up telling you like you don't have to make a decision. Just take the new out.
Okay.
So they was running a promo for the 7 days free. I don't know if the trial's still standing, but hit that link right there. I just put it right here in the chat. You can hit that link. You go on there and get the algo. Switch up like that. Okay.
I appreciate it, man.
My pleasure. My pleasure. Okay. Anybody else got any questions? Oh, yeah. Second. Also put this. Boop, boop. And for anybody else who could be new, we also got the trading cards. We got other learning material on the site you can get to help out with your learning process. So definitely know flashcards to help y'all out with chart patterns. Those are key. Those flashcards are very key. I know a lot of people love those cards. So they on there. You can quiz yourself or whatever the case. That's that other link I just posted. So yeah, y'all want those. What up, Lee? What you got, baby?
Cover what you were going to mention on AMD?
Oh yeah, I was gonna kind of just go over that chart. I just kind of came back to this one. I'm just gonna bust it down. Oh, it's so order blocks, right? They form in different ways. So you got 3 candlestick order block continuation, got 2 candlesticks and stuff like that. Sometimes you got 3. So what was AMD? I was on the daily chart with this. And if I see some more order blocks, I'll highlight them and point out to you. Right. What's this? On Friday, right? So I was expecting. All right, so one, this is an order block right here. For the lady accent. This pattern right here is an order block. But how it gets solidified is when it come back down for the retest. This is one type of order block. Just one. Okay, just one. It's more than that. These little step downs like this. So you get a 2 candlestick step pattern and then it continues. Those also turn into order blocks. All right. So you got multiple kind of order blocks. You must study the information. I shared a couple of books. So when you got consolidation spots like this, right? These become supply and demand zones. So same thing as an order block, they behave the same way. They just a little bit bigger, right? All the consolidation. That's why you want to trade to it. You don't want to just fall asleep on it because if it consolidated here for a long significant amount of time, a lot of times they don't like to break down until that is kind of Okay. So what was I going to say? Okay. So recently, what it was last week, I was stalking AMD out for this gap. Right. I said, man, they're gonna get up to that gap and then they're gonna reject. Now Monday hit, them boys definitely got up to that gap. Then they said, okay, cool. They dipped down and then they said, nah, we're going out. Because they wind up trading against the original strategy I was looking for. I'm looking for them to get up in here and reject off of this, once again, 2 candlestick order block, right? I'm looking for them boys to reject. I knew they was gonna come here, but they started to consolidate, so I had to let this go because they would not drop. So they started off going, but they still holding up in here. So I'm just gonna revisit them when they break down. But this all looking for it. Same pattern, like I told y'all. I just showed you another chart. Exact same pattern. All these patterns form on every single chart, I promise you. Yeah, I'll form. But you trading some AMD, Lee?
Yeah, I did this week, and man, it was pretty good. I've really been trading AMD and CVX.
Yeah.
Yeah, I just been seeing a pattern with CVX, and I went back and I watched some of Amy's Coach Amy's video, and she was drawing. I guess of course I've been doing my levels. That's been helping out tremendously. And on the weekly, I go all the way up to the 50%. And now I'm just setting my alerts. And whenever I'm at work, that alert go off. Just whenever I turn around and pull it up, and I'll drop down to the hour, and I'll drop all the way down to the 15 minute. Drop all the way down to the 12 minute for my entry. And that has been working out perfect.
Great. Love to hear it. Love to hear it, sir. That's what I'm talking about. It's all about patience, marking the levels out, and making sure you plan on when it's ready. And by setting an alert, it keeps you from staring at the chart all day long. That's why they invent all this stuff. So you can set the alert, come to the chart when it's actually ready, and then you execute instead of lingering around, waiting, getting FOMO, and then because you get that little itch and you kind of jump the gun. So you don't want to do that. Set the alerts are always key.
And those weekly liquidity zones, man, those are magnets to price. And the weekly and the monthly, because man, it's automatic. It's automatic.
Let it believe it. That's the key. You already know how I do it on Sundays. I mark my weekly levels of the previous week. Those I'm looking for a price to get hit, price to hit one of those levels, then we play it accordingly. Right. So always a major key.
Yeah, that was my main issue. My chart wasn't organized, and I was not drawing out those levels on the previous week. And man, I'm like I said, it's working out perfectly now.
Okay, man, love to hear that. That's the whole thing, is about being organized, being ready. Because the longer if you wait, you'll have those problems, right? You'll kind of run into issues. You're not sure exactly where everything's gonna go. You're not sure like how much you're gonna make. But by simply taking a little bit of time out on the weekends or after the market close, going through your chart, marking your levels, getting the game plan ready, good to go. I used to keep like a little journal so I used to chart, look for trades, screen for trades. Then once I screen for the trades, I look for the setups, and I say, okay, cool, this is what I'm gonna do. I go find my option contract the day before because I already know which one already looking good because it got some open interest in it already. And I'll write all that stuff down, keep those notes. And then next day, I just follow the notes I wrote down the day before because I'm not rushed. I don't have no FOMO because I can't do nothing. So there's actually letting me sit there and plan. That's the key, is sit there and plan when the market is not running so you don't make no irrational decisions. You know to make the right decision.
Now, can you just do a screener based off of what you spoke on tonight? Just do a screener off of the of the candlestick of a
So,
yeah.
so what you'll go in, you go to filter. All right, yeah, go to filter, then you go to technicals. Scroll down. So it's you gotta see like what informs that pattern, right? So you kind of have to look for certain key like candlesticks, or say, hey, I'm looking for a doji. Then you're gonna say, well, let's display. It's kind of hard to get those set key patterns zone in on, but just go down and see patterns. Say, well, I'm looking for an abandoned baby, right? Bearish. Click that. And then you'll be like, okay, now my other technicals ain't gonna line up because this is for bull markets, right? So say above simple 20. So we get to we set that all together. So apparently we got none, right? Still going 1 hour. So nobody lining up. So now I go back. So look for another pattern, right? So bearish Harami. That pulls up. Nothing. So you get, you may get something, you may not. Pulls up. But the best thing to do is kind of go through the market, look at your oscillator, say which one oversold, and then you just kind of run it like that. Yeah, I'm using limit orders. I prefer to use limit orders. If I have to, I take a market order. But if anything, I like to use limit orders. Those are best.
So are you getting in at the wick?
I have a certain level. So I 9-10, I'm using fibs, or I'm using anything to say, hey, like this box here, right?
Mm-hmm.
My limit order be here at the edge of it, or I say, man, I know they'll probably come deeper. It just depends on how much force coming in. Or if I have like a certain key candle I'm looking at inside this box, I'll put my limit order right here. If I feel like they really gonna reverse there, I'll probably keep it right at the box, but just set your limit order right there, stop loss outside of that.
Gotcha. Okay.
So this on the chart, let's say 147.47, that's my limit order, stop loss at 151.40. That's all you got to do. And you set that, and that way you get the best entry possible. Because when you set limit orders and you know exactly where price is going to go, you can push the limits and you'll have little to no drawdown. Go.
Yeah.
Look, you may have a little bit more drawdown just in case you're wrong, but that stuff happens. Nothing is 100%. All right. That's how that shakes up. And on that note, people, yeah, that's my time for today. That answer your question, Bilal?
Oh yeah. I'm just trying. Yeah. When you came on, you was talking about entries. I'm just working on my entries. That's all.
Yeah. Okay. Yeah.
Yeah.
I do my floors on Sunday, Tuesday nights. So always just tap in and we go over all this stuff.
Yeah.
So,
Yeah. Appreciate it.
All right, no problem.
Hey, Neil, you said Sunday night. What other night you do?
Sunday and Tuesdays.
Tuesday. Okay. Thanks.
Yeah, that was I do late night trading floors on the market. So yeah, that'd be the late night. Got karaoke Tuesdays and smooth out Sundays.
What time are both of those?
10 p.m. Eastern.
All right. Thank you.
Problem. Katie, I think I seen you unmuted real quick. What you got? Get about it.
I just want to say thank you, man. Appreciate your time, bro. And
I know.
everybody else, you know, as a rookie in this, thank you for being patient with me.
Man, listen, man, everybody was a rookie one time before, right? We all been there. So I'm sure a lot of people on this call understand where you at and where you coming from. So it's no rush process. We do this stuff. So it is. If you need less moments, nobody cares. I don't anyway. So yeah. If you go to the resource channel, I have plenty other videos. I recorded and posted it in the resource channel. Stocks, Forex, and futures, they all posted in. I'll make sure I post them in all charts. This one also will be posted later. And Coach Amy and others got other videos, training videos posted in there too. So you can go in there and watch them, you know, and get stuff, brush up. You feel me? All right. So on that note, people, appreciate y'all coming out. Let me stop the recording.